I absolutely, without a doubt, guarantee you that stocks will fall and they will fall hard.
And even a broken clock is right, two times out of the day, right?
The question is,
And let me tell you something. As a financial professional, right, there are certain no words that we are restricted by. And to say the word guaranteed is you can't do that. You either have your license revoked or you get fined or penalized in some way or another, right? So you can already tell this guy isn't a financial professional.
will you be ready to win while everyone else is panicking? Now picture this. Headlines everywhere. Markets are down 30, 40, 50, 60%. Stocks are free falling.
Okay, when's the last time you saw the market down 60%? I got to check 2008 again, but I don't remember it going down even that far, right? So we were around like 10,000, I remember in 2008. And I think we went to either 6 or 58, like right around that level, so it didn't go down 60, right? So, you'd have to have a bomb go off or something.
Investors are panicking. Chaos everywhere. No news is helping. Good news
Dogs are sleeping with cats.
is bad news. Bad news is even worse news. It's happened before, but most of the people in this market right now have not experienced that. And most people will sell and lose, but not you. Because today, I'm going to show you how to turn that chaos into the greatest financial opportunity of your lifetime.
And I'm wondering if this guy's trying to sell a program. So you can kind of get the salesy stank, if you will, of this kind of narrative, right? But I don't know. We'll see. I'm gonna try to stay positive here.
Right now, investor confidence is absolutely skyrocketing and it's at the highest level since 1988. Look at
And this is true.
this, guys. This is the share of consumers expecting stock prices to rise over the next 12 months. Guys, the 2000 bubble was right here, about 47%. We just eclipsed about 56%. You might sit there and say, well, it's not that big of a difference. Guys, this is a huge difference. Now, here's what's interesting. The lowest levels, financial crisis, this wasn't really that low, COVID, because it was so short. And you look here at the tech crash right here. This was the bottom of the market. Guys, we want sentiment to be bad. When sentiment is bad, people are selling. When you
And we had pretty low sentiment if back in what was it 22, but you could kind of calculate what that sentiment was going to be, right, with the rise of interest rates, and those were real easy calls back then to make. But listen, and I'm gonna sound like a broken record in this, but if you are invested long term, it just makes sense to stay with your strategy and not jump around, right? It's been proven more profitable throughout your investing journey.
sell, stock prices fall, valuations get better. On this channel, we're trying to teach principle-driven investing. One of the major attributes is we don't let the price of stocks tell us if we're right or wrong. We look at it as relative to value. Junk bonds are priced as if risk doesn't even exist. It feels like nothing could go wrong, but that's exactly the problem. Investor optimism is at this highest level, and that's not confidence, that's complacency. And complacency is dangerous. Now, guys, not every investor sentiment is this bad. Let me show you another one that's very popular and show you that it's high, but it's not as high as this shows. Now, this is the bullish to bearish sentiment on the Investors Intelligence Survey. We're still at this point right here, currently. That's what this dotted line is. And back here, in 2018-19, we were higher. And things still kept going up. And that's the thing about bull markets. That's the thing about complacency. That's the thing about euphoria. You don't know when it's going to end. Look at Bitcoin.
Okay, so I remember that. It was around February. A lot of people were selling, and then the markets just kept on going up. But that he doesn't make a point, which is kind of weird, right?
$108,000 per coin. Guys, I see zero intrinsic value in Bitcoin in its current state. And yes, I know people are going to argue and say, Paul, it's just because you don't get it. Guys, that's funny to me that every single time I hear Warren Buffett, Howard Marks, Seth Klarman, Charlie Munger, all these brilliant people talk, when people disagree with them, they don't say you just don't get it. Yet then when some 19-year-old kid who can program a computer looks at Bitcoin and says it's the future, and he looks at me and goes, you just don't get it, I think to myself, who doesn't get it? Another sign of complacency.
Maybe earlier on, right? But now, if we're talking about, listen, if the U.S. government is talking about having a Bitcoin reserve, as was just proposed, then I don't know. This guy's cracking me up a little bit. All right.
Now, I talked earlier about junk bonds. Guys, what is a junk bond? Well, there's certain levels of bonds that get rated.
Okay, so junk bonds are below investment grade. So I think it's BA, and shoot, I should know this. I'm gonna be in trouble. Moody's is BA. Standard & Poor's, I think it's BB. Ooh, I should know that one. But basically, it's this. I don't have to know it, but I should know it. Basically, is that you're only allowed to put, as a portfolio manager, right, based on different criteria, but you're only allowed to put investment grade bonds into a client's portfolio. So if it slips below that investment grade, you're not allowed to do that because there's a higher bit of risk.
Under a certain level, corporate junk bonds are considered higher risk. They have more risk of bankruptcy, more risk of default, things like that. The spread between junk bonds and the risk-free rate with the government.
Okay, so the risk-free rate is referring to T-bills, right? So your T-bills are offered at a discount. I think the rate right now, it just went down recently. I think it's at either 4%, 4.3 or 4.2. But I'm confused on why this guy is talking about junk bonds to T-bills.
As of September 30th was 3.03. It got as low as 2.7%. The historical average is about 5.33%. That's almost half, guys. That spread is almost half. So you might sit there and say, well, big deal. What does that mean? Well, guys, let's think about it this way. You have good credit. Your friend doesn't pay their bills. They have bad credit. So when you guys go buy a car, who gets the better interest rate? You do. But in this situation, what's happening here is, as time goes on, the banks get so and so excited to give money out to people because money's so plentiful, they start charging a rate to your friend who doesn't pay his bills very close to yours. Are they factoring in the risk? They're not properly factoring in.
Okay, I gotta stop this video at this point because this guy. You ever see a politician, and I could shit on this guy through this entire video, but I don't know if it's for any look. You ever see a politician who they ask him a question, and then he says a bunch of true things, but they have nothing to do about the question, and it doesn't give any specific answer? That's basically what this guy is doing. And look, I have a degree in this stuff. I have multiple licenses, and yeah, I did take a look at this guy's. Let me see here. Where was it? Okay, right here. Right. The first thing that your advisor will do, right, is to make sure you have an emergency fund, right? This guy just gives horrible, crappy advice, and I kind of looked at his stuff a little bit briefly, right? He looks like he started off in real estate. He might know something about real estate, right? But markets and other financial advice, I would stay away from him like the plague, right? We'll do one more. Let's look at this guy. Chad trades. Now, Chad kind of cracked me up a little bit. Let's see. Mr. Chad. Mr. Chad's videos here. Yeah. There's a lot of this, right? Kind of a dead giveaway, right? And listen, he might know something, but some of these financial influencers they try to, I don't know, they just have this look, I'll say, right? But let's look at Mr. Chad's
What's up, guys?
here.
So in this video, I want to go over how to find and draw perfect support and resistance zones specifically for day trading, okay? And more importantly, I'm going to be going over how I use support and resistance inside of my trading, how I actually find the zones. There's 3 key things I actually look for, because as a lot of you guys know, I'm not a support and resistance trader. I do not get long in support. I do not get short in resistance zones. You guys know I'm a...
So here is, now, without going into his video, he might have something kind of system built in without it. But okay, so he's obviously into technical analysis as opposed to fundamental analysis. The thing is, if you're making these short trades, especially if you're like a pattern day traders, four trades throughout the 5 business day period, you could lose your shirt, right? I talked to somebody who was in the industry for like 30 years, right? And he said this, and listen, they're out there, but he said I don't know anybody in the industry that makes money like that ever, right? So, you know, you I'd say, and this is just a guess, take this tongue in cheek, but I'd say out of 1,000 technical analysts, you probably find maybe like 1 that's consistently profitable and does this kind of thing, right? But we'll take a look. Maybe Chad's got the magic formula.
trend trader. I only trade with the trend, but I'm still using those zones. I still need to know.
So here we go again. So he's talking about, so there's you never know when the trend's gonna switch, right? So you could have some kind of event happen, right? And you're going with the trend, and all of a sudden goes boop. Or you put let's say you put your stop limit orders right a little bit low before you get in, right? And all of a sudden they trigger, right? So it's difficult to say what is going to it's like a coin flip, right? It's difficult to say where it's going down. Yes, there are trends. So for example, you look at like and getting towards the fundamental side of things, right? You look at let's say NVIDIA, right? Without touching the fundamental part, it's going up, right? So that doesn't mean it's not going to have its down days, right? So say, for example, you like NVIDIA, everything's going good, and China invades Taiwan, right? Well, you're going to, if you don't have the right precautions built in, you're sunk. You're right. You're going to lose your shirt. So anyway, I'm just talking. It's just not my look. I'm a fundamentalist through and through. It's just not my type of trading. You know, I believe in long-term strategies, and I believe in common sense.
Where they are, and I'm going to be showing you how I use them in this video to help me make better decisions as a trend pullback trader. So that being said, super excited to go over this, guys. It's going to be a very important lesson. Let's dive straight into it. So before we dive into the charts and how I actually use the support and resistance zones inside my own trading strategy, which I'll reveal later in this video, first we want to go over the basics. What are the types of support and resistance? So the first main thing is key levels, and then we also have intraday levels. So key levels is the bigger time frame the bigger key zones.
Okay, so this right here is called the support level. This right here is called the resistance level, right? And there's also this kind of head and shoulders thing that I'm not going to get into too, but this is you know this goes towards this type of analysis, right?
Intraday level is the support and resistance created during the actual trading session, during pre-market, stuff like that. Again, you only really need to know that if you are a day trader specifically. So first, let's go over key levels. Again, just because I'm a day trader, right, and sometimes a scalper, key levels are super important to help me make better trading plans, okay? So before I ever take a trade, I make a plan of exactly what I'm gonna do based on...
And I'll say this, he might be positive, but it only takes that one time to kind of lose your shirt, right? So
my level. So I like to get my key levels on the 1 hour time frame. I'm on NASDAQ. You can see this is why I like to trade a lot. I'm a futures trader, and we can see we have key resistance level up here. We had a support level here. It broke and then it turned into resistance today. We had a key support level